All right, so listen, let's draw the line directly to you, the listener, today. Your lights are on because as a nation we are able to generate enough power to keep your lights on. Now, about half of the capacity that this nation has to generate power is provided by private power producers. Now, these independent power producers, as they are described, have different types of deals with the government of Ghana. Majority of them have something called a take or pay agreement. Now think about if you rent a car, right? You rent a car for 7 days. You pay for 7 days. Whether you drive that car every day in those 7 or not, you still pay for 7 days. That is similar to a take or pay agreement. So you engage these people to produce power. They come, they provide the equipment and everything to produce the power. Whether they produce it or not, we pay them. Oh, and just to make it more interesting, we are the ones who provide them with the fuel as well. So if they are available, ready to produce power, and we don't give them fuel, we still pay them. At the moment, we're paying an average of $16 to $17 million per month to these independent power producers, each. So over the years, we have racked up a bill that is almost $2 billion US. We've not paid. And they have given government an ultimatum. If by the end of this month we don't pay, they will switch off. So this is about half of our installed capacity. You will be affected if this happens. Negotiations are underway, but we are being told by the World Bank that these arrangements were too expensive. So why did we go into them? Why did we sign them? What was the situation at the time that made us go into these deals that are now being described as too expensive? We'll find out. We'll also find out why we are still in them. Why have we not renegotiated them? Some of them expired. Why did we renew them? These are questions we will answer together. But first, we want to get an idea of the situation with the power producers. Where do they stand? What are their concerns? Kwesi Awortwe is former CEO and chairman of the Volta River Authority, a power producer, but of course, a state-owned power producer. Now, he has a great overview of the sector, so we can learn a lot from him. Mr. Awortwe, once again, we're so glad you could join us. Let's start with the situation with these independent power producers. From your perspective, what exactly is making them take the stands that they have?
Right. Well, good morning again, and good morning to your listeners. I think you rightly pointed out, today the IPPs supply about 50% of the country's requirement. And they actually supply about 2/3 of the non-hydro power in the country. So if you take out Kusawgu and Bui, the IPPs supply about 2/3. So they're really significant. And a lot of that growth has really happened in the last 10 to 12 years, especially starting from those doomsday years of 2013 onwards, about 10 years now. So when, and I think you have to remember that some of these were emergency projects, if you recall, in the time of doomsday. But you rightly pointed out that these emergencies, some of them at least, are no longer emergencies. They've been around for 5-10 years, and they may end up being around for another 5 to 10 years. So I do think that the take-or-pay gets a bad rap, and it's not always understood. I don't disagree with the World Bank in the sense that some of them are expensive. I mean, when you bring on an emergency plant, or in the analogy you use, when you don't have a car and you need to rent a car on the day, you're more likely to pay a very expensive rate than if you plan for it months ahead of time. But the World Bank also says something, and in fact, if we all listened to that interview from Mr. Laporte a few days ago, and he made some very interesting points about the sector, and I'm not going to go into all of that right now. But he talked about the government's own economic electricity recovery plan, ESRP, that was started in 2019.
Yeah.
And one of the things that is mentioned in that is a competitive tender process. And so it's unlikely that any investor who brings $500 million will not want to have some guarantee for getting paid back. I don't think you can fault any investor for that. And that's where a lot of these take or pays come in. But I think where our problem has been as a country is we have not ever followed a competitive least cost procurement plan that says over the next 5 to 10 years, this is the amount of power we need, bid in, we'll take the least cost and go from there. Almost every project we've done has been on an ad hoc basis. And so you end up getting 5 or 6 unrelated projects at different costs. And that is why the cost has become so high. Versus if we had done it in a much more systematic, competitive procurement process point of view, we wouldn't be facing some of these costs.
Right. So I guess you've identified the route that we ran into these deals because we had an emergency. We didn't go through what would normally have saved us money, which is the competitive tender process. So we signed these deals, and they are take or pay. Now, the detail matters. Because you're right, the idea of a take or pay in itself is not bad. It happens all around the world. But what we've noticed with the Ghana deals is that we agreed to pay for about 92% of their capacity, whether or not they give us power. All right. So, I mean, if their capacity is 200 megawatts, we're going to be paying them for 184 megawatts every month, whether or not we come to them for power. Now, that surely we didn't have to sign such a punitive deal. Could we not have agreed to something less? I mean, 40% seems to be the industry, average around the world. Could we not have gone for something closer to that?
We might have done, Kojo, but once again, remember, we were in an emergency period. And in an emergency period, all kinds of, whether it's justified or not justified, all kinds of justifications can be made. Remember, we had a deficit of power. And in that very short period of time, from 2013 to 2016, that deficit became, a surplus. And so, we should have done what you said. We should have looked at it very carefully. We should have taken our time. I can't speak for the government of the day. And I know there's some effort to do that now, but that is really why we are in the space we're in. There were all these emergencies, quote unquote. The terms and conditions were justified, whether they were or not. And so we did get really, even though we, in some respects, solved the problem of the deficit, we got saddled with some very some expensive costs that we didn't need if we had gone through a competitive tender process. And this is something we've been talking about for years. I mean, if you read World Bank documents 10 years, 15 years ago, it's the same recommendation. We've got to go through competitive tender. We've got to go through a least cost procurement plan. When you are faced with emergencies because you're not planning, all kinds of justifications can be made. And I think now, after the fact, we are trying to restructure and renegotiate. But if you like, we're climbing, we're going upstream, we're climbing uphill. And that's really the challenge this government is facing.
Right. Now, in 2017, government raised issue with the cost of some of these deals and talked about renegotiating them. We're in 2023. Apart from AXA, who have renegotiated, and interestingly, they have now agreed to a 40%, what's it called? 40% rather than 92%. So apart from AXA, we still have deals at 92% with almost all the others. what is the holdup? Why has it been difficult for negotiations to happen between IPPs and the government?
So, Kojo, you might remember that a few years back, I think it was at the beginning of 2020 or thereabouts, either 2020, I believe that's correct. The government raised $1 billion bond to do some of this restructuring that you're referring to.
Yes.
And then they started the process. I think if you've been following it, there was a team out of the Ministry of Finance. It was part of this ESRP team that I just referred to, or effort to restructure and renegotiate. And I understand I know for a fact they made some progress, but now they've done the work, they've restructured, they've renegotiated at least the first couple of contracts. But that money that they set aside has been used for other things. So, it's one thing to say I'm going to restructure and renegotiate, but, like all of these things, there always must be some sign of good faith that I want you to do these things. What am I giving you in exchange? And so here was the government who raised $1 billion, but then used it for other things. So couldn't go through with the restructuring and renegotiation that they had started 18 months prior.
Now, let's talk about how efficiently or otherwise these deals have actually been run. Because I suppose if we had been relying on them enough, there would be no concern about these excess charges. So how efficiently is Ghana utilizing these IPP arrangements? I want to raise the example of SEN, which on any given day is probably not providing any power to the grid. Very often, their daily contribution is zero. But we have a take or pay with them. So we're paying them anyway. Are we
You're
taking...
talking about Senate, I'm guessing.
Sen Power is the one I'm talking about.
Okay. I don't think that's quite correct. Sen Power is producing power right now. But, there are there are about 6 or 7 different IPPs. I would say the particular one that is closer to your description is Senate, which is doesn't produce as much power. But Senpower, on the other hand, is producing.
Forgive me, you are right. Forgive me, I misread that. It is Senate that I'm talking about. Yeah, Senate, yes.
Yeah. So, what's the question there? I think there is, if there is an ability to restructure and renegotiate, obviously the government should try and do that. I mentioned that they had started that effort 3 years ago. They went quite far, but then they used the funds that they had raised for other things, so they couldn't complete the exercise. I think at this point, and I think, we've read in the papers that the IPPs, have been consistently asking for their monies to be paid with no result. But now with the IMF deal in place, I imagine that those expectations are raised, number one. But two, we know for a fact that the IMF and the World Bank are really working hard, World Bank perhaps more than IMF, to come up with this debt sustainability plan. It's well advertised. And it's, how do we pay our debts? How do we create a sustainable sector? And, understandably, the electricity sector is such a key part of that. Yeah. So, there's still need to try and restructure and renegotiate, but there are quite a lot of things that have to happen to make that successful. Right. And we touched on it a little bit already. I would say the first thing is just, what's our plan? Just a well-articulated strategic plan that is implemented. It's one thing to put it on paper. What's the alignment between our various, Ministry of Finance, Ministry of Energy, to execute on these things? What's the institutional capacity to implement? we may have had a plan on paper, but we don't implement that plan that's on paper.
Right.
But I know the World Bank has identified this as an issue that needs to be addressed. And many of these things have been talked about in the past, and it's really very much about how do we create that sustainable sector that we can pay our bills. So I think the point is, over the last 10 years, a number of emergency projects have been brought in. They weren't brought in on a competitive tender basis. They're not least cost, so they are expensive. There is a need to restructure. Government made some initial efforts to restructure, but they couldn't go through with it. And we find ourselves in this place, not necessarily related to electricity, but it spills into it.
Yeah.
But the sector is so important that if government doesn't find a way to address 50% of the country's requirement, we are going to be in trouble.
Right.
And these debts keep mounting. I mean, there was an article in the Graphic a few days ago. The number is around 1.6 billion. I mean, a year ago it was 1 billion. I mean, so this number is increasing, not decreasing. Yeah. So there's got to be a way to mitigate that. And as I think we all know, the World Bank is working pretty hard to try and, working with government. But from our point of view, we've got to have a well-articulated strategic plan that is aligned, that is owned by our various sectors, that has we can actually implement. And I mean, let's face it, it's something that also we talk about all the time.
Yeah.
I mean, it's one thing to have enough capacity, and I want to talk about that in a minute, but the weakest link in the electricity chain, it remains ECG and NETCO. If our distribution losses are 30 to 40%, we're losing. The money just sort of evaporates into thin air. And if we don't find ways to fix that problem, create that institutional capacity to, collect revenue, reduce our losses, we will always be in this place. And then the final point, Kojo, I want to make, and I think is very important, is that, in the last 7 years, if you think back, 2016, I think peak demand was around 2,100 megawatts. This is an important point. And today we're probably around 3,500, 3,600. In other words, every year for the last 7 years, we've added about 200 megawatts of capacity. So, when you hear the World Bank talk about an investment climate, how will investors come in if, one, they're not getting paid, if the losses are so high, if that restructuring effort hasn't been put in place? So investment climate comes back to what's the plan, what's the way we get paid, what's that systematic way that there is a return for investors. And we need to create that environment.
I want to wrap with this in just the last minute that we have. You talked about the weak link being ECG and their inefficiencies, which is a big problem. If you do the calculation, about 50% of the power that they generate cannot be accounted for. You talked about 30% of it, not being traceable to customers. But then even the customers they have, some of them are defaulting and not paying. So about 50% in total cannot be accounted for, which is a problem. But even if they were to completely 100% fix their efficiency issues and collect all that is owed them, which at the last check was about 5.7 billion Ghana cedis, it would still not be enough to pay the almost $2 billion bill that we owe to the IPPs alone. Before you now have to think about fuel and all of these other things that they must spend money on. So even if we fix ECG, we still have a problem, don't we? What would your advice be, finally, to government on how to deal with these negotiations?
I think government is aware of what needs to be done. And once again, I mean, we've had the clues, certainly in the last weeks, with the various reports coming out. I mean, one of the things that has been the case is that we still have tariffs. We're not covering the cost of production. as a whole. Partly some of it is losses, part of it is in inefficiencies. And I know it's painful for consumers, but if we produce electricity and we don't sell it at the cost of production, we will never make progress.
Yeah.
And you know, there's some cross subsidies in there as well that need to be taken care of. So we've got to get the governance of the system right. And I know, once again, these are things that are understood, they are known, and it's really very much about having the political will and institutional capacity to follow through on what we know we need to do. So, but when you ask me, I mean, government knows what to do. We've got to get our tariffs right. We've got to cover the cost of production. We've got to reduce our losses and fix ECG. We've got to very quickly get into a least cost procurement competitive tender regime. And if we don't do that, we will always get into these sort of emergency situations where we're scrambling to bring in power. We get them at terms that are not necessarily favorable to us. But it's got to be integrated, it's got to be well thought through, it's got to be coherent, and it's got to be accepted and owned by the agencies across the sector. And sometimes that breakdown, that lack of alignment is a real problem. But if that's not there, it's very difficult to implement properly.
I want to say a big thank you to you, Kwesi Awortwe. That has been very enlightening. We appreciate your time and that overview that you've helped us with. Kwesi Awortwe.
You're welcome, Kojo. Thank you very much.
Indeed. Kwesi Awortwe was the CEO and board chair at VRA. Okay, we're about to kick the conversation into the next gear. We'll be engaging the Deputy Minister for Energy, who happens to be the Honourable Member of Parliament for 2nd D, Yapei Mercer. We'll also be speaking to the ranking member of the Finance, Mines and Energy Committee of Parliament. He's the Honourable Member of Parliament for Kusawgu, Yapei Kusawgu constituency, that is Mr. John Gyinapo. In fact, he's on the phone right now. Mr. Gyinapo, good morning to you.
Yeah, good morning.
The conversation has already started, and we're certainly going to be hearing more from you. But I just thought, before we take a break, just a preliminary question that I have for you. These deals that we signed, are these actually the best terms we could have got at that time?
Thank you very much. First of all, let me quickly just correct this information you guys put out. You guys were categorical that the AXA deal has been renegotiated. Let me put on record that the AXA deal has not been renegotiated. The AXA deal elapsed or expired in June 2022. I have the AXA contract right before me here. And when you open the AXA contract, it does not refer even to the previous contract. This current contract was signed on the 3rd of October 2022, and it is titled Power Purchase Agreement between ECG and AXA. And so there was no renegotiation. The contract expired. Government had no obligation to sign this 370 megawatt plant. And so I just thought I should clear that.
Thank you for that.
2 is the issue of Senate, and Ms. Awortwe dealt with it extensively. Senate has take-or-pay clauses, that is true. That contract was not executed under President Mahama. That contract was not executed under President Mahama. It predates President Mahama. You also mentioned SenPower. It has take-or-pay clauses. That contract predates President Mahama. TICO has take-or-pay clauses. It predates President Mahama. Asogli has take-or-pay clauses. It predates President Mahama. TT2PP has take-or-pay clauses. It predates President Mahama. The current AXA contract that you talked about, there are 2 contracts. The 370 megawatt contract for 15 years, another 205 megawatt contract for 20 years, signed under President Akufo-Addo. It has take-or-pay clauses. It is post-President Mahama. the LNG contract in Tema, 20 years, signed under President Akufo-Addo, has take-or-pay clauses. It did not happen under President Mahama. I just want to set this base so that everybody listening would appreciate that take-or-pay clauses, which we call in the industry as capital recovery costs, are part of power purchase agreements because energy sector projects are capital intensive. They have a long gestation period. They normally have a long tenure. It cannot be 1 year or 6 months, normally 5 years and above. And then it is market restricted. And that's the most important point for me.
Right.
Market restricted means that if you do not buy it as an off-taker, they cannot go and sell it anywhere. Given this circumstance and the fact that President Mahama assumed office at a time when we had a power deficit or energy deficit, and we were in load shedding, the contracts that were executed, submitted to Parliament for scrutiny and approval, are the best contracts you can ever get as far as I'm concerned. Indeed, President Mahama ought to be commended for negotiating those contracts. And if I could quickly just give you just one example. The Ameri plant, a modular plant, brand new GE frame, LN 200 plants, eventually we paid about $450 million in 5 years. That plant is now a legacy plant that belongs to the Republic of Ghana. We would use that plant for the next 20 years. And when you check the benefit in terms of revenues, you'll be making about $1.2 billion from that plant. It's only a president who has foresight, who has vision, who would decide that he will bring such a plant, let the plant generate power and pay for itself. And I have the availability and the production in terms of the Ameri plant. I can share the statistics with you.
Right.
It's not as if the Ameri plant came second.
If you don't mind, what I would like us to do, because my question was about the terms of the deal. I think we can all agree take or pay is not the enemy here. It happens everywhere in the world. But it's the terms that you signed for these particular deals under your President Mahama, and of course the ones that happened after the tenure of President Mahama, that we are interrogating.
Failing which a business as usual, not doing anything situation would have yielded a debt of about 12.6 billion US dollars. Yes. And so the interventions that were introduced was intended to significantly reduce that business as usual position to about 5.2 billion. As we speak, I know that we are in the region of about 6.1, 6.2. What it means is that the ESRP implementation has significantly impacted the outcome or the outlook that we're looking at to the level where we are today. Some of the 30-item program has been completed, some are in progress, and so that's where we are, and we are actually in the process of reviewing the ESRP document consistent with the IMF program so that the ESRP can be extended to 2026 to try and bring some sanity within the energy sector space. So yes, we are on course. We haven't achieved all the targets yet, but significantly you can see that the ESRP program, the introduction of the cash waterfall mechanism, natural gas clearinghouse, and several other initiatives that is outlined in the document, some on the power sector, some on the gas front, and also some regulatory, including the full cost recovery and several other items, have significantly impacted the position as we speak.
So I mean, I'm looking at the executive summary, for instance, and paragraph 3 says the ESRP is a roadmap of immediate, near-term, and medium-term actions needed to achieve government's aim to bring the sector into balance by the end of 2023, and a commitment by government to fund the annual sector shortfalls with sector stabilization payments from 2020 onwards until the sector is in a balance to prevent further accumulation of arrears.
Yes, Wesley, you're right. But of course, I have here with me the ESRP program implementation progress report, which covers the period May 2019 to 2021. Obviously, not all the parameters have been achieved, no doubt. But like I indicated, without the implementation of the Energy Sector Review Program itself, would have resulted in a 12.6 billion deficit position. And if you look at the payments that Ministry of Finance has made directly to clear the gap, in 2021 alone, GOG payments to IPPs was 1.065 billion. This was through direct payments to the IPPs, MOF bonds that were issued, ESLA PLC bonds, and payments through the National Gas Clearinghouse system. So some work has been done. Like I said, most of the items are still ongoing. There's been a need for us to do a review, which is presently ongoing. And my expectation is that the new timeline that we've set ourselves in agreement with IMF and the World Bank would be achieved by 2026.
Yes, just by way of clarification on the 12 billion bit. So the 12 billion was an accumulation if it doesn't come in. So from 2018, for instance, according to the document, 2.7 billion. By end of 2023, an additional 2.5 billion. Over the period, 2 billion on the average would take it to 12 billion if nothing was done with, about all these challenges. Your government, in sourcing the ESLA bond, for instance, one of the things you told us was to actually clear the debts at the time. So is it a case of further accumulation of debt within your tenure?
Well, further accumulation of debt would mean that have we signed new contracts that then brings about that debt? Or this is the situation that the contracts that we contracted in the past has brought us to?
But
or
you
that
did sign at least one new contract with AXA, and theirs expired completely.
Yeah,
and you signed another take or pay with them.
Well, the new AXA transaction is not a take or pay; it's a take and pay. Save that there is a commitment to dispatch about 40% of their capacity year on year,
Which is
and also the tariff was reduced from the 13 cents or so to under 10. Now the rationale was simple.
Kilowatts
Now,
per
if you like,
kilowatt hour,
the
sorry.
rationale was really simple. Yes, we've had excess capacity over the past 5, 6, 7 years. But is it static? Obviously not. So because your demand is growing, year on year, your excess capacity is reducing. And so ECG takes the view that, look, in 2026, 2027, there may be the need for us to add some capacity. And so if AXA had no decommissioning provisions in their transaction and the facility is here, can we renegotiate under the new guidelines that have been issued by the Ministry of Energy to the effect that going forward, any new power plants that is coming into Ghana would not be on a take or pay basis? There will be no government guarantees, no PCOAs, and that we're going to buy energy. Can we have a discussion with AXA that then allows us to do that within the new regime? And so that's exactly what they did. How anybody faults that will really come as a surprise to me, because you see, Kojo, look, I've been on several platforms with my good friend John, and the contention from the NDC side has always been that, look, there's no excess capacity, or that we signed the best deals ever. Over the weekend, thankfully, the IMF we've challenged them consistently. And when I was driving in, I heard my very respected senior brother, Mr. Awortwe, make the point that there was some deficit between 2012, 2014, that then necessitated the need to bring in some emergency power. With all due respect, the data does not support it at all. Okay, the problem that we encountered between 2012 and 2014, and you recall that the president at the time told us that there was a damage to the West African gas pipeline, okay, which had stopped gas supply, which is a fuel, from coming into Ghana. And so really, what we needed to do was to procure alternative fuel to power the plants. We didn't have the money. And if you permit me, I'll show you a World Bank document. I believe, Winston, I've shared this with you before. That clearly shows the installed capacity pre-2015, the capacity added since 2015, and the peak demand. And you will see clearly that there was no deficit in power generation.
If you can
in
share
fact,
that with us, we'll put
please,
it on our
I will.
social media.
In fact, all the power that, and of course, this is the raw data. You can interrogate it. That doesn't mean that, for example, Ameri, which was added post 2015, was never used. But if you look at the data, what it shows is that all the capacity that was added post 2015, in 2015 we did not consume any. In fact, we didn't consume all the capacity that was in place already. We did not consume any in 2017. We did not consume any in 2018. We did not consume any in 2019. It was only in 2020 that our peak demand began to eat into the capacity that had been added between 2015 and 2020. That said, it doesn't mean, for example, that car power was not used, because you had a gas take or pay from the Sankofa field that then required you to turn on car power and turn off some other power that ordinarily you would have consumed. But of course, not turning on car power would have meant you incurring the take or pay obligations on the car power side, the power side, and also the take or pay obligation on the gas side. So it is the net off of the capacity that you had and the capacity that you added that is really going to tell you the story as to whether there was excess capacity or not.
Okay.
And the data is clear. I've heard the argument by my friends in the NDC that, look, needed to look into the future and all sorts of things. All well and good. But is it the case that that futuristic view that you took brought cost to the state for which we are bearing the brunt today or not? It's a simple matter. And that is the issue that the IMF has put to bed.
Before we get
without
back to
any dispute whatsoever.
Let me just find this out. So the ESLA bonds, ESLA for instance, how much has been accumulated and how much has been used to clear the energy sector debt? You know that?
I don't have the data immediately, but of course, there's some provisions, sections in this document that deals with it. If you give me a minute, because that clearly is administered by the Ministry of Finance.
Yeah, while you're looking
and they issue annual reports to Parliament on a year-by-year basis. But the ESLA has various components. It is not all of it that goes into paying the shortfall in the energy sector. There's some that goes into the petroleum stabilization fund. There's some that goes into national electrification. There's some that goes into public lighting. And of course, if you look at the reports that are submitted to Parliament on a year-by-year basis, you would see whether that assertion, and I've heard over the weekend on social media that the finance minister has been diverting ESLA. The proof, I don't know where it's coming from. But the issues are very clear.
Let me ask you this. In 2021, we went to the bond market for 1 billion. Okay, to, among other things, see if we could buy back Sen Power. Where is that money? Where is the 1 billion?
Well, I'm not in a position to confirm, but my understanding is that the Sen Power transaction had some issues. Bank of Ghana, there were some government obligations that the government, Ministry of Finance, owed to Bank of Ghana, and so they used that money to defray that obligation. And so there was no money available at the time that they concluded the Sen Power negotiation to buy them off.
So we use the money to pay Bank of Ghana rather than...
That's my understanding, yes.
Interesting. Okay. All right, listen, let's bring in John Jinapor, because before the break, Mr. Jinapor, I was interested in the terms under which some of these take-or-pay deals were signed. You gave us a long list of deals that were not signed under John Mahama. So let's speak to the ones that were signed under President Mahama when you were Deputy Power Minister. 92% guaranteed dispatch. Why?
Those that I just gave you are all 92% dispatch.
I
So it's
understand.
not-
But let's talk to
not
the
a
ones
new
you
thing.
signed.
Pardon?
I understand that. But let's speak
So I'm
about
making
the
a
ones
point.
you and
Now,
your government
Honorable
signed.
Yapei says that in 2013, it is not true that there was a deficit. Honorable Yapei, I refer you to the 2013 Energy Commission report, page 4, paragraph 1.2. The corresponding peak demand was 2,556. Dependable capacity, 2,267. This is from Energy Commission, official document. So please, it's not an opinion. These are established facts that the capacity at that time was not enough. And it just quickly comes back to you. Today, you claim that you have an installed capacity of more than 5,000, a peak demand of just about 3,500. So there is an excess of 2,000. And yet you are signing 500 megawatts of additional capacity. It completely defeats your analogy. Because if you look at your argument, then you don't need to be signing these new capacities that you are signing. Has those excess capacities suddenly vanished? Even late 2022, you were telling us that our capacity was too much. And yet in October, you have signed this new deal. And not just that, you signed a new one of 205. So it defeats this your point. And then the cost, Ivan, let's deal with the cost. He says that the AXA deal was 13 cents. Is that not it?
Yes, it's
and
now
that the
under
new
10.
one, they've negotiated it to 10.
Under 10, yeah.
You bring a plant during emergency for just 5 years, at 13 cents. You are not in emergency. The plant has been fully paid because it was amortized. When you are determining capacity, you are looking at the capital recovery cost because you estimate that the developer would have invested some amount to 13. Now it has been amortized. You go and sign for 15 years. And anybody who has done some energy finance listening would appreciate what I'm saying. And you bring it to 10% and you say you've done better. Where is that better? Where is that better? First of all, do you need that capacity? Do you need it for 15 years? A plan that was signed for 5 years, we came under serious criticism. Today you are doing 15 years at 10, and you think it's so good or so much. You talked about the money they borrowed, 1 billion. That was in 2018 when they came to Parliament. 2018, they told us that 1 billion of Eurobond was supposed to refinance the energy sector. We approved the money. Parliament gave you approval. You didn't even come back to Parliament to seek a variation. You take that money and you go to use it for something else. And you think that we should praise you for what you are doing. But you see, the most important thing is that now there's data. We are no more talking of projections. And I expected the IMF country director to do a good job. Because when you say it is too expensive, relative to what? I have a document here and I'll share with you. Let me just give you the title of the document. Even if you Google, you will find it, because in these days, it's very easy. This is a document from the African Development Bank titled Comparative Analysis of Electricity Tariffs in ECOWAS member countries. When you read that document, Ghana's bulk generation tariff is one of the lowest, despite the fact that we have a lower hydro to thermal component. Ghana's end user tariff is one of the lowest. In fact, that document confirms that Ghana's bulk generation tariff is lower than Cote d'Ivoire. And so for the IMF country director to just say it's expensive, relative to what? And I have another document from PricewaterhouseCoopers, where they did an analysis of a plant like America in relation to other plants in the sub-region. It is not the most expensive. And I can give you that data, I'll share with you. So for an IMF country director to veer into this area, he should be providing data. You can't just make a stupid statement and expect that we'll take that hook, line, and sinker. We would analyze the issues and deal with them. You know they've been talking about figures. And I heard that Japan mentioned 12 billion. Fortunately, at the finance committee, when Mr. Kenoforeta appeared before the committee, I insisted that we needed all these payments. I've shared that Excel sheet with your producer, and so he can give it to you. Total payments in the energy sector, and I mean total payments, both petroleum, power, everything, is $6.1 billion. From 2016, 2017, 2018, 2019, 2022, 2021, all these years, 6 billion. It's not 12 billion. Now, if you look at the Excel sheet properly, fuel supply alone is over 2 billion. This is fuel supply, over 2 billion. And these payments are in relation to gas and other related costs. If you read the 2022 Energy Commission report, in 2014, we were spending $600 million to import light crude oil. 600. Today, in 2021, we are spending zero on import of light crude oil. So when you do the average, it means that on gas, total fuel, whether take or pay or not, we are spending 200 million. I prefer spending 200 million to 600 million. When you are doing this analysis, you just don't do accounting analysis. You do economic analysis and take into consideration the opportunity cost. But if you did not have Sankofa, it meant that yes, you won't pay Sankofa with any guarantee, but you will spend $600 million to buy light crude oil. And if you look at the data from the PIAC report, Sankofa has been ramping up and supplying gas. So these payments you are seeing, a chunk of them is based on actual gas supplied. A chunk of them is based on actual power supply. And you sum it up, Kojo. You sum it up, and I'm happy with the way you sum it up, that the IPPs are threatening to do what? To shut up. And that you don't want it. In the same breath, others say, we don't need the IPPs. If you don't need the IPPs, and you have your own power, why are you concerned that when the IPPs shut up, you have load shedding? That should tell you something. So if you are spending 2 billion on what we call power produced or not, the first thing every serious government would do is to tell us plant by plant, what amount of power did they produce? What was the cost of production? How much was ECG able to collect? What is the shortfall? And then you account for what we call the reserve margin. What is the cost of the reserve margin? Because the reserve margin is not factored into the tariff computation. When you net off, then you can be talking of excess capacity. But when you put all these figures together and just come and tell us 2 billion, whether you consume or not, you pay. Excuse me, with the greatest of respect, then you don't understand the sector.
So, Mr. Jinapo, if you don't mind, you see, what I'm interested in is the terms of the agreements that you signed, you and your ministry signed when you were there. Okay, I'm interested in those specific terms. Okay, where you agreed to, and I appreciate that you were not the only ones who signed such deals, but I'm interested in your rationale. You agreed to 92% guaranteed dispatch under take or pay. You also gave them government guarantees on top of that. Okay, and my question is this: at the time, what went into these decisions? Why did you feel that this was the best deal for Ghana at the time?
So let me take a plant and just do the analysis so that you your listeners will appreciate it. Take a Mary. You do about 5 cents. 5 cents for 5 years, the plant becomes your property for another 20 or 25 years. That 5 cents is not the most expensive. Indeed, it is the best deal you can ever get. I prefer to pay that 5 cents and own the plant after 5 years, because Ameri was available for about 85%. Then I have the data. So if they're available for about 85%, it means that they are generating that power. And if they are generating that power, it is paying for itself. And today that plant is a property of the Republic of Ghana. President Mahama deserves commendation for that foresight. Currently, an Honorable Yapei is on the line. Tema LNG, it was signed by this government. Indexed to crude oil. It's 100% take or pay. 100%. Not 90%. He's there. I have the contract here. The whole document. And I can give you the formula. So it is not new. And the terms are the best of terms. Moreover, these terms were submitted to Parliament for scrutiny. We had over 100 members of Parliament from the NPP side. In fact, they seconded some of these agreements. So clearly, to say that they were too expensive, it doesn't make sense to me. Too expensive relative to what?
Well, I mean, if government has been able to negotiate a deal with AXA for, in fact, it's not even take or pay anymore. There's no government guarantee, and it is 40% guaranteed dispatch. This is AXA, the same AXA. So, I mean, obviously, it is possible under negotiation to get a better deal.
So let me deal with this analysis because it's flawed. That AXA plan has been paid for. So you don't even need 40% take or pay. In fact, that for me is a mark of incompetence to go and agree with AXA that having paid off the plant in that 5 years. Today, whether we like it or not, like you are saying, once AXA says we are available, whether we take it or not, based on this same agreement, we will pay 40% of that cost.
It's still better than 92%.
And I'm telling you, you did not renegotiate. Government had the option to decide that we don't even want AXA because the contract has expired. Is that not the case? The contract has expired. You contract it in emergency, which means that you need it urgently. And when you need it urgently, you pay a premium. That is the first thing. Two, do we need AXA or not? The excess capacity all of a sudden has vanished. You bring AXA, and you're not doing 5 years, because you are doing 15 years. There's an issue of a time value of money there. So how can you compare a 5-year contract to a 15-year contract? The duration is not even the same. So this analysis is completely flawed. Why did they not do a competitive tender?
Right.
That's the question you should ask yourself. This government issued a statement.
Let's get answers to that question you're raising, Mr. Jinapo, because Mr. Mercer is right here. You've heard Mr. Jinapo.
That they will no longer do things.
You've heard Mr. Jinapo. He's asking a direct question to you. You haven't renegotiated. You've signed a new deal. And he says you didn't even need to put in 40%, guaranteed dispatch because we own the thing already.
We didn't own AXA. In fact, if you listen to John, it saddens me even more that they contracted AXA for 5 years for AXA to pay for the entirety of the cost of the plant, and they were at liberty to take it out of Ghana anywhere else in the world to go and operate it for another 25 years at a profit, obviously, to AXA. Is that what he's suggesting? So and it shouldn't make you even more sad.
So we didn't own it.
No, we don't own it. We don't own AXA. We don't. The only plant that was a BOOT was Ameri, which of course, the brouhaha that degenerated. It's not for me to repeat here, but Ameri, since the contract expired, if you like, the build, own, operate, and transfer transaction was consummated and the facility was transferred. It's still sitting in Awortwe. It's never been turned on before till date. You are aware? In fact, the government plans to take it to Kumasi, Awomaso, so that it can help in stabilizing the grid in the middle part of Ghana. But you see, curiously, how anybody else doesn't understand the sector, including the World Bank, but my good friend John Jinapo, is surprising.
But he does make the point that at the time, it's not like there were comparatively cheaper deals.
But I've said to you that, and I've shared the data with you, that the data that I have does not support this deficit argument. In any event, the Energy Commission document that he makes reference to does not include Bui. Bui was commissioned in 2013. And so if you add Bui, that clearly takes away the argument that there was a deficit that needed to be filled. In any event, what was the basis of Mr. Mahama, then the former president's assertion that gas shortages from Nigeria is the reason or part of the reason why we're having electricity outages? That obviously is fuel. You had alternatives that you could buy to power the plants. You just didn't have the money.
Yeah.
Again, Kojo, this fixation on Tema LNG. One, yes, we contracted the Tema LNG facility to expand the scope of our gas base. Obviously, to help in reducing our dependence on other fuels, okay? Because gas is at all times cheaper than LCO, DFO, and HFO. But the truth of the matter is that, as we speak, Ghana hasn't incurred one dime on LNG in Tema because LNG has never been delivered. So let it not be said that because we signed a take-or-pay agreement in the LNG space has led to the debt situation that we find ourselves in today. What the IMF country director said was clear.
World Bank country
director. It's important that we clarify.
Yeah.
Was clear that the economic situation that we find ourselves in today is partly attributable to the huge cost that we as a country have incurred in contracting power generation plants.
Right.
Fact.
I absolutely hate to do this.
For my friend
that our time is
very
up. I'm so sorry to do this because we do have more to discuss. This conversation cannot end here. It's too important for us to wrap up here and leave it. So we will be returning to this. We will be getting our guests back. We will be interrogating these issues and putting your questions to them. Trust us, we will do that for you. But right now, we've got to say a big thank you to Andre Egyapa Mercer, Honorable Member of Parliament for 2nd D, Deputy Minister for Energy, John Jinapo, Honorable Member of Parliament for Yapei Kusawgu, and Member of the Finance, Mines and Energy Committee of Parliament. We want to thank them both for their time. We will return to this.